Well, hello there, and welcome to the Apartment Building Investing Podcast. I am your host, Michael Blank. I'm excited that you're here to learn all about apartment building investing, the number one way to become financially free. And a lot of you have been asking, hey, what about Dealmaker Live? Oh my gosh, it's, of course, middle of July, and we don't know what's going to happen in July right now, but it's very difficult right now to sell tickets to a live event. Would you agree? So what we did, instead of canning it and skipping it for a year, that would be a shame, is we've turned it 100% virtual. It's going to open the same weekend, July 16 to 18, and it's going to be, not in Dallas anymore. It'll be online, but you can get tickets at dealmakerliveevent.com and check that out. We're going to have the same group of speakers, and we're going to have some really exciting networking opportunities using some really cool technology that I'm really excited about, because one of the main benefits of going to live events is the networking. Now, we can't replicate it exactly, okay? But we can get really darn close with this new technology we have, and I'm really excited. I'm not going to tell you what it is, but it's going to be really cool. So make sure you join us. Right now, the tickets are the most affordable. They will start getting more expensive as we get close. The main benefit is that we are not capped at 500 because we're online. So that is a major, major advantage of that. So grab your tickets at dealmakerliveevent.com and make sure you join us. Now, today on the show, we have Jason Perro, and what I love about Jason is he's a full-time multifamily investor. He quit his own job and got his wife to quit his own job. And like so many people who are thinking real estate investing, he got started with single-family house investing a long time ago. He's kind of a slow learner, actually, if you think about it, this Jason, but he's sometimes not much different than I was. Because when I got started with real estate investing, it was single-family house investing, and it was only me. Before I learned that, my gosh, it's actually multifamily, and it's not just me, it's a team, and it's investors. And he made that discovery the slow way. And we are obviously to change all that. We'll tell you, no, you can skip the single family house investing. You can go right to multifamily. And you don't have to do it on your own. You don't actually need the experience. You don't need your own cash. What you do need to do is build a team and raise capital. And it's unbelievably easier to do than people think. And so we're here to change that as well. On the show also, we talk about current times because of the coronavirus, and because Jason not only owns many hundreds of units, he also property manages them himself. He has very good deep insight into, from the top all the way down, to what the impact of all of this is short-term to our industry, as well as medium-term as well. So we can talk about some of the issues we're going through right now as operators, what we're doing about them, what we're telling our investors. So it is going to be an awesome show you're not going to want to miss. All right, with that, let's do this. Now, before we get to the show, I want to say that now is a great time to invest in yourself, learn more, and connect with others so you can build your support network. I think we're going to get some very, very interesting buying opportunities throughout the year. And now a lot of us are at home, and it's a great time to invest in your education. So we opened up our Dealmaker Mastermind program. It's super affordable, and it's basically an online forum where people connect with each other. And because people are paying a little bit of money every month, it is quite a bit different than our Facebook group, which is Apartment Investor Network. It's a closed private Facebook group that you can join as well. But Dealmaker Mastermind is kind of our environment of deal makers. And right now it's only $49 a month. And you can get started right now by going to themichaelblank.com/DMM for Dealmaker Mastermind. We've had it for many years, and it's a great way for you to connect with other people, network. We've had companies grow out of that. We've had joint ventures and deals come out of that. Super excited about that. It's really right now our way to helping you connect in an affordable way to really make the shift from where you are now to where you want to be by connecting with a community of supporters. So head on over to michaelblank.com/DMM to find out more, and hopefully you can connect with us there. So let's get right in the show with Jason Perro. Here we go. Jason, welcome to the show today.
Hey, thanks for having me, Michael. I'm happy to be here.
That's awesome. It's always great to hear the story of someone who has made the shift from full-time employee, but also got your wife from full-time employee. That's pretty cool. So give us a little background on all that and how you got started, and then we'll kind of get into your story a little bit.
Okay. So my wife and I got started. We purchased our first duplex a week before 9/11. So almost 20 years ago. And we both worked in medical sales. So she was a pharmaceutical sales rep. I worked in medical device sales. Spent that first decade of the century, just buying, duplexes, triplexes, that type of thing. Occasionally we get a 20, 30, 40 unit type of property. So 2010, she was laid off from her job. By that time, we had been married for 8 years, had 2 kids. It was a perfect time for her to be able to leave her day job, stay at home with the kids, and work on the business and the areas of the business that she would contribute, just being able to not be part of corporate America. And I left my day job in 2012. By that point, we had grown to 300 units. Just what we owned together, had no investors, no partners, just something that we self-funded along the way. And then fast forward to today, we've been doing this full time for the last 8 years. Since then, we've started syndicating, and about 2/3 of our portfolio is stuff that we own, just her and I, no partners, and then about 1/3 of that is stuff we've syndicated. So we're right at about 1,000 units right now, all in Erie, Pennsylvania.
Yeah, that's great. So there's a variety of questions I have for you. One of them, why did you start getting into real estate in the first place?
So the big thing, I grew up like a lot of people. I wasn't poor, but we weren't rich, and I knew nothing or learned nothing about money until I started working. I had jobs all through high school and college. Still didn't know anything about money. I just knew how to earn it. But when I got out of school, I said, gosh, I really want to figure out how to make the most amount of money. I want to be a millionaire. How do wealthy people do it? And I had an internship with a financial planning company that the one thing that really, where the light bulb went off in my head, that real estate was the thing for me. I was helping the senior planners go through their clients' accounts, and I was going through different folders and looking at their clients' portfolios. And there was a dual income couple. I think it was a doctor and lawyer, made about $600,000 a year, and their net worth was maybe a few $100,000. And then there was another couple who were 2 school teachers, maybe made $75,000, $80,000 a year, but they had a net worth of $5 million. Like, holy smokes, how is this even possible? And again, knowing nothing about money, their planner or account manager said, well, yeah, most of that's in real estate. They're school teachers, but they buy a couple duplexes a year, and they've built wealth and build passive income that way. So, well, man. And so that was the catalyst for me. And then of course, read Rich Dad, Poor Dad, The Millionaire Next Door, and just started feeding my mind with all sorts of goodness as far as trying to get me started on my real estate journey. And then I just started meeting people, and probably half of them would say, you don't want to be a landlord. Why would you ever invest in real estate? You don't want to deal with tenants. You don't want to have to deal with toilets in the middle of the night and things like that. But the flip side is the guys that I met that were real estate investors. And at the time they seemed massive to me. They may have 30 or 40 units, but they lived a really great life, and they had some nice passive income on top of their day jobs that they were, that they had. And I looked at that and said, well, they don't seem too bogged down by tenants, tenant issues and trash and things like that. And I was early 20s at the time. So I just, was young enough and dumb enough to start in this business. And I'm very glad I have. I mean, I don't really regret anything for the last 20 years.
So when you got started, what was your initial plan with regards to real estate?
So the initial plan, was to become a millionaire. I mean, it was a basic goal. Since then, obviously things change and you really evolve your thinking and into helping others. But at the time I thought, wow, if I could just make, say $40,000 a year. Now at the time I was 23 years old. So that seemed like a lot of money to me at the time. Said if I could buy enough rentals to make this my day job, then I can do the things I want to do. I can spend time with my friends and spend time with my wife, and we can travel and do all these things. And of course, as time goes on and your goals and your living expenses increase, and just the things you want to do and give back, the way to give back in the world, those goals have grown, immensely. but that was the biggest thing right at the time, is I just simply wanted to be able to make money, because, I saw it. I grew up on a farm. And again, it's not as though we were without money, but I saw my parents struggle. My mom was a school teacher, and I said, gosh, I don't want to have it that hard. They always worked to provide for us, but, I didn't learn about money. They had a ton of debt. And I just knew there had to be a better way.
Yeah. So, but it sounds to me like your plan was to do some single family house investing. Is that right early on? I mean, that's kind of
Sure.
what my plan was early on. But if you were in your early 20s when you started this and you didn't quit your job until 2012, a lot of years has gone by since then, right?
Yeah.
So how did your
Yeah.
plan work out from your early 20s, and maybe why didn't it work out?
So if I knew then what I know now, I mean, I would have just, I would have bypassed that 10 years of working. But
Ain't that
at,
the
at the
truth?
same at the same time, though, I had what I think was still a really good day job. I was making multiple six figures of income, and my wife and I were able to just pour a ton of capital in and self-fund our business. So, where a lot of people will do joint ventures, they'll find a wealthy partner to help bankroll their enterprise. That was us. We self-funded the business. So I think when we left our day job, we were coming from a position of strength to where, where we've capitalized our business ourselves. We took a lot of that risk early on. So I don't regret that. I think I could have, I could have kind of hacked some of the things that took me forever to take action on, such as syndication. I mean, I started reading about syndication in maybe '07 or '08, and I never really took action on that until about 2018. But at the same time, everything we've done along the way has worked to our advantage. So I don't regret waiting that long. I just when the time was right, the time was right.
Yeah, I mean, I'd say the same thing. I don't regret anything I do, though. Having said that, if I could tell myself, my younger self, a few things, I would have done a few things differently, maybe more efficiently, possibly. Why did it take you so long to take action on syndications? Now, yes, you had a pretty high income, but and you could self fund certain things, but now know that you could raise millions of dollars with syndications and
Yep.
scale the business a lot faster. So, why at the time did you feel like you even knew about syndication? Why did you not take action at the time?
So I had honestly, it was a self-limiting belief.
Hmm.
Just is the basic answer, but I thought of it in terms of a partnership, and my frame of reference at the time was, why would I ever want to do a partnership? Why would I want to answer to all these people and have all these people calling the shots in this business? And I really like the control, when we own something 100%, but I didn't frame it in the right way. And when I understood that I could get into larger properties, better properties, that I could serve more people. So, in terms of, our network of wealthy friends and family members and business acquaintances and whoever we meet that would invest in say a syndication deal, we're providing a lot of value to them. And you really see that right now when the markets are down, down 30% with this, with this coronavirus thing. And it's just I think that we're, providing a ton of value, allowing people to diversify into something else. But also in terms of building a team, I still have the control I want. I'm able to negotiate the deal, find the deal, run things and call the shots, but also bring in, my wife and I have a great co-sponsor who's also a very well-known local business person. So that also strengthens our deal. And I think having that team just really positions us well for the long term.
So you're talking about a limiting belief, saying, "Hey, I will lose control." Now you're just telling me you still have control. So it really
Yeah.
was a limiting belief at the time.
Yeah.
Think back. What other things that you think now might have been limiting beliefs?
You know, well, I think that I thought that we could serve everybody, and that I would just buy and hold real estate forever, never sell anything. But sometimes it's good to take money off the table. Sometimes it's good to transition an asset into bigger properties. And so for a long time, I felt like I was going to hoard every piece of property I could. And I still have we still have a lot of units in our home area, but I've also found that some of the folks and the mentors that I encountered along the way, I needed to do for others what they did for me. And what I mean by that, I was able to level up my investment experience in my portfolio at various stages throughout our journey. I'd meet somebody that said, "Hey, I've got 56 apartment units that I'll hold the paper on. You just need to come up with 10% down." And that was our first big transition. That was in 2005, and that person basically lent me $1 million. But 7 years later, when I left my day job, he effectively lent me another 2 million on property that he held the paper on. And I realized that, sometimes there's a life cycle to certain properties or certain business strategies, and it's okay to exit some of those along the way. You don't have to stick with one thing for 30 years. You can evolve and adapt and grow.
You said something interesting about serving people, and we're in the real estate investing / syndication business. Really don't think of it that way, but in light of what's going on with a Wall Street and everything like that, this elevates our mission to a possibly higher level. What kind of spin would you put on that?
No, I agree. I've had a lot of friends that are, they're lamenting the fact that their net worth has gone down by 30-40% in the last few weeks. And that's a reminder, some of those that have invested in our syndication deals, I mean, they've asked how that's going. And I said, well, fine. The real estate is still worth what it is. We have plans in place to make sure that we really don't miss a beat, or if we do, it's hopefully a minimal disruption. So I think when people see that there's another way to protect their money, and that's I guess the downside to real estate is it's not liquid, but the nice side to real estate is that you can't sell off in a panic when you're just a limited partner in a syndication, and they can just have this predictable long-term investment. And I really stress the importance of that to our investors. They still need to be diversified. For me, I'm not very well diversified. I mean, it's real estate. I've got some single family homes, and we have, some couple hundred unit complexes, but for your average investor, it is good to be diversified. But, if you're with a trusted owner, a trusted operator, you got somebody with a steady hand that can kind of steer the ship during troubled times, it's all going to be fine. And you're going to have that predictability and stability that you need for the long term.
And we're talking about the long term right now. We're recording this, by the time this comes out several weeks later, the world will literally be a different place because of this coronavirus situation. It literally changes by the day. So it's possible whatever we're saying here is completely irrelevant, though some people say that it may last weeks, possibly months. Now, you talked about the long term of multifamily, and while we're on the topic, the question in everyone's mind right now is, okay, great, but what about the short and medium term, right? Why is multifamily, what is your outlook for multifamily in the short term? And really look at, the next, say, 3 or 4 weeks that may affect your operations, and look 3-4 months into the future. And, how do you assess the outlook and the impact of this short term?
Sure. Well, I'll approach it from two sides. So we self-manage our portfolio and our units we syndicate. So I can speak to it from a property management standpoint, and I can speak to it from the syndicator standpoint. So we're crafting a letter right now with our passive investors that we're prepared to make an April 15th distribution. So we're nearing the end of Q1. Great quarter for all of our properties. But the letter is going to say something to the effect that, look, although it was great, there's a little bit of uncertainty right now, and we just want to see how April and May play out, and we will distribute the money as quick as possible. It's sitting in a bank account in cash. But, I think a lot of folks right now are very, and maybe I'm wrong, and I'm okay being wrong, but it feels as though people are very quick to jump on this forbearance train. There's been these guidelines with agency debt that have talked about forbearance, and I'm like, and I understand the need to be prepared, but I'm like, my gosh, we're not even to April yet. Do you know if your tenants are not going to pay? And so, I mean, as we talk a little bit more about this from a syndicator standpoint, I'll tell you what we're doing on the property management side, and why I feel really strong about not just the short term, but the long term of this. So, we're preparing our investors to say, hey, here's the distribution. We are on track, but we believe in the importance of paying our bills. That in the event that you have to enter into forbearance with a lender, there are restrictions and covenants that could be particularly difficult. And I think you'd only want to pull that lever in terms of a last resort. And I think if that means that as a general partner, I need to forego my distribution, to make my investors whole next quarter, or that we just simply hold the cash for an extra month or two to see how things play out in the short term. And really, it's a matter of how does it play out with our tenants. I mean, at the end of the day, it's just how are the operations disrupted. One other note along this, kind of the overall market outlook, it seems as most of the lenders we deal with that are very bullish about the fact that agency debt will still be in play. Fannie and Freddie will continue to make loans. The biggest challenge is, if we're practicing social distancing and certain areas are under lockdown or quarantine, well, how do you inspect a property properly? And so, we have a right now we have a 127 unit under contract and a 95 unit that we're working to get under contract. Well, instead of a 60 or 90 day turnaround, that might be 120 or 150 days in order for all of the proper inspections and things to take place. Raising money wasn't the problem. We've been able to overfund our deals recently. And I think that's, even more so with the volatility in the market. The lenders are willing to lend the money. We've have no hiccups there. It's just, are you going to get somebody to fly to Denver from Chicago or to fly to Erie, Pennsylvania? That's, we have to be aware and work around those types of things and be very patient in the coming months. But, as it relates to our investors' outlook and the way our properties should be pictured as stable, in my mind, I guess I would be worried if I was in the middle of a value add play where the deal's success is contingent on the fact that I have to push rents $300, $400, $500. That may give me pause and probably reevaluate the situation. But we are generally trying to buy properties where the stress test is that, hey, if we could be 30% economically vacant and still pay our bills. Hey, we can be, we may not make a distribution that quarter, but that it would really have to take a major, major hit to not be able to do that. And then we typically raise enough and have enough in the bank to have several months of working capital and try not to run too thin of an operation before these kind of crazy times like this where the world's going sideways. But practically speaking, from our portfolio, from my vantage point, I mean, I would be lying if I said I wasn't scared, but or a little bit afraid. But I think the thing is, most of our tenants have made the effort if they're disrupted by COVID-19, be it loss of a job, they may be a waiter or waitress, might work in retail, entertainment, whatever the case is. They said, hey, I had to file for unemployment. I don't know when I'm going to get paid. So I don't know when I'll be able to pay the rent. It might have to be in 2 or 3 times, during the month of April and May. And so I think extending that olive branch to our tenants to let them understand that we're willing to work with them to a degree. Like, number one, I mean, if their job's not affected by COVID-19, well, it's a moot point. They should still continue to pay their rent. If their job is affected, I think you have to have a heart and you have to have sympathy and work with them. I mean, we're not in a position where we would forgive rent, but certainly, we're in a position that, you can waive late fees, work out a payment plan with them. And maybe every month of disruption, if they lose their job, say for 2 months, well, maybe you set up a payment plan for 2 or 3, 4 months after that to let them get entirely caught up. But I certainly wouldn't let them let a balance of rent accrue for months and months on end without being able to take action. The biggest challenge might be if there's a mass group of tenants that say, well, screw you, Mr. Big Landlord, we're not going to pay our rent because we don't think we need to. You might have that on isolated instances, but I really think, and in my heart of hearts, we treat our people well. They understand that there's bills to be paid. And what we've seen, if this is any indication of just the human nature, if you treat people well, they'll treat you fine in return. We had a girl that was supposed to be evicted on Friday, this past Friday, which I know this might be a little dated when your podcast comes out, but it was March 20th was the lockout date. And locally, they had suspended all evictions for at least a month at that time. So her lockout date was then pushed back to like the end of April. Very well could have said, yeah, forget this, I'm not going to pay. She owed about $1,500. Well, Wednesday night, about 36 hours before the eviction was to occur, we received a money order at our office for $2,200. So she paid not only her balance, but paid April's rent. And we've had a few of those instances. Now, I have 2 evictions in process in our portfolio that they may ride this out as long as they can. That's going to happen, but I don't see that in mass. And so, I'm hopeful and I'm pretty sure. I mean, yes, there's going to be disruption, but not, I don't know if we're going to have 50% of the people just not be able to pay because there are economic safeguards. I mean, today might be the day that they pass this federal stimulus package and the vast majority of our tenants will benefit from that by getting income in their own pocket. And these folks are also going to have a beefed up unemployment package as well. So, so there should be the ability to pay, if not all, then definitely most of their rent.
Yeah. So here's what I'm hearing you say and summarizing. A lot of it depends also on how long this is going to go, but there are safeguards built in on multiple levels. Number one, there are cash safeguards with regards to you could withhold distributions to fund the operation. Then you have certain operational cash reserves that would be next. And then third really would be your break-even point is, you can be running 30, even potentially 40% vacant before you can no longer pay your mortgage. And if that were to fail, now these is potential forbearance laws. In other words, the probability of us losing our properties are fairly minimal because of those multiple layers.
Right.
And then, so that's kind of the worst case scenario. And then the other one is on the income side, what's going to happen on the income side. A lot of it depends on how bad and how long it's going to get. But it does sound like the government is putting measures in place that will allow people to at least get by for the foreseeable future. Will some tenants take advantage of the situation? Yes, absolutely. But like you said, I think they're in the minority. So short term, what I see, I think it get a little bumpy. We may not be able to distribute as much or anything at all, just as a safe measure. I do think, I don't know what I think we're going to come out as more like a V-shaped recovery. I think once this thing goes away, people are just going to come out of their holes and, go back to the gym, go back to the restaurant, go back to wherever, the store. And now it's going to spring back pretty quickly. I think in my mind, the question is how long will it go on?
Right.
So.
And that's the tough thing. I mean, it's a really, this is affecting people's health. It's affecting the healthcare system and then people's pocketbooks. It's not a, gosh, I mean, it's devastating all around, but like all things, this too will pass. And I think, we have to treat people kindly and compassionately and fairly. But we all have businesses to run. And I think that, if in mass everybody just revolts and doesn't pay, well, again, like you said, you can go into a forbearance program. There's so many levers that can be pulled so that multifamily owners, syndicators, even the guys that own, just a handful of, say, single family homes, that people hopefully aren't going to lose their properties, in this kind of economic cycle. I think there's a lot of ways for people to hang on, even if they're struggling, even if they're going through some sort of, strange time with like a bridge loan or something like that. They're just going to have to reevaluate their business strategy and dig deep. And I think that for the most part, hopefully everybody gets through this in one piece.
Yeah, I think so too. The way I kind of look at the multifamily space, it's like deep waters. There's waves crashing up above, and then there's the quiet water beneath. Because at the end of the day, if we don't have to sell or refinance or do anything like that, we still have cash coming in, all right? Exactly. And maybe it's not as much as we had projected, but there's still cash coming in. We're just going to ride it out until it comes back, and it'll come back. And what we're seeing in the meantime, interestingly, and what you're seeing is we're actually already now fairly early in the cycle seeing buying opportunities in various interesting ways. Number one, sellers are becoming more flexible with the length of due diligence terms, even considering financing contingencies, because we don't know what's going to happen with the capital markets. Like you said, the due diligence now period takes longer, getting inspectors out there, getting lenders out there, all that stuff. And also, if the income does go down the next 2 or 3 months, therefore valuations are going down. Right. Therefore, even if you're under contract now, or we're about to go under contract, or we're going to get under contract, the valuation of that building is going to be lower than it was, say, 3 months ago.
Right.
Coupled with the uncertainty and the fear out there, people are like, owners are like, man, I think I missed a boat. I should have sold 6 months ago, but I wanted too much money. And now all of a sudden they're motivated. So we're starting to see already, I mean, within days, buying opportunities and more flexibility, where before it was like best and final, and there's 30 people in the best and final round, and and they're bidding up the prices. All of a sudden, within like days, we're seeing that crumble a little bit. So I think we're going to be okay on the ownership side. It's going to get a little bumpy, but I think more importantly, it's going to open up buying opportunities. What are you seeing?
Yeah, I agree. I mean, I think it was kind of getting like the Wild West out there for a minute, where everybody's, I mean, like, we see these deals across the country, and how people were having to be so creative and come up with really unique strategies was amazing to watch, but also scary. And I think that, that's probably where people take a hit, where, you might be in a hot market where, they're really dependent on rent growth. And well, now if everybody's quarantined and can't work, it might be a little difficult to raise the rent $400 or $500 a month. So that's probably a position where some of those folks may want to get out of that deal just, halfway alive or in one piece. So that might present some buying opportunity. But to your end, if there's sellers were getting, I don't say they're getting greedy. They were reacting to the market, and if people were willing to pay a high dollar amount, it just became ultra competitive. I think I think folks that have a strong foundation in this business will be able to pick up some really interesting opportunities over the coming months and even years.
Yeah, I think so too. I think right now we're seeing that people aren't doing anything. They're barely going to the store and getting toilet paper. Yeah. We're seeing a major drop off in the participants in best and final offers right now. It's just a competition. It's like they're just kind of sitting and watching. And to us who've been watching this for a line, we're really frustrated by our inability to get deals. We're like, man, this might be a very close window. So we're kind of excited about that as well. So now, one of the things I noticed, you're in Erie, Pennsylvania. One of the things we always say is stay away from the more rural areas. And the reason we say that, is, and I'll get back to why you might be the exception, is because it's difficult to manage. So when most people are investing outside of their areas because we're living on the East Coast or the West Coast or whatever, and so we're buying in other parts of the area. So remotely managing stuff in rural areas is a challenge because there might only be one property manager. Yeah. And replacing that property manager might be a challenge, or the next one is an hour or 2 hours away and your cost goes up, etc. Now, you're being successful in rural areas, and there's always an exception to the rule, but talk about why it's working for you and what a listener or the watcher can learn from that.
Sure. So Erie, Pennsylvania, it's not quite as rural as other parts of Pennsylvania. So we are.
That's true. Yes. You're in the middle of nowhere, Pennsylvania. You're actually in a fairly large metropolitan area.
They call it Pennsyltucky. It's all farms in the middle of Pennsylvania. And I mean that with love to our Kentucky friends and my central Pennsylvania friends. But it's the greater metro area of Erie is 350,000 people. So there's 100,000 people in the city, but the surrounding suburbs, which is literally like 5 miles in either direction, it's very close, is about 350,000 people in the county. So that's one thing. And we are equidistant from Buffalo, Cleveland, and Pittsburgh. So an hour and a half from each of those, more major metropolitan areas. So Erie's a little bit of a tourist town, and not in the sense like, New York's a tourist town, but we get a lot of folks from those areas that come up here either in the winter for fishing or skiing. There's some ski resorts nearby, and in the summertime it's beautiful. So there's a lot that people from those areas come in to do, and that helps drive the economy. We have the largest medical college in the country located in Erie, so there's a lot of influx of outside money that comes in here. But I would say what's nice, I guess, in a smaller market is if you have a trusted operator. So if somebody's looking from a passive standpoint, or if they're looking to syndicate, we kind of fell into this organically. 20 years ago, I didn't know anything different other than, hey, I'm going to buy some duplexes and manage it myself. And as we grew, we built our property management business, which only manages stuff that we own or that we own through syndicating. So I think that you are right. It is challenging because there are only a few companies in our town that do third-party property management. And I would have my concerns handing over the reins on the day-to-day operations to a company like that, especially during a crisis like this, where at least I know, hey, look, I can forego my payment and my income to a later date if that means keeping my investors whole or taking care of my tenants and things like that. So what's the thing that I've always said over the years about Erie and other tertiary markets is, oftentimes you don't see the economic booms, but you never really see the busts. And right now, people in our town are hurting. All the restaurants are shut down. We're under pretty much a statewide lockdown. Only life-saving jobs are allowed. Companies are allowed to be open. So we're adapting and doing what we can. But I think that, but again, with those economic safeguards, with unemployment, this federal stimulus, it might be a little bumpy, but I'm not overly concerned at this point yet. Because look, we're not even to April yet, and we're already receiving April rents, and that's to me a positive sign of things to come.
Now, one of the things that you're doing a little differently than some other people is you decided to self-manage almost from the beginning.
Yeah.
Certainly now. Why did you decide to do that?
So in the beginning, I didn't know any different. Like the people I was seeking out in the business, they owned at the time 20 units, 100 units, and that's what they did. And then when I learned about property management, I said, well, wow, I'm making all this money. How do I hand over the reins to somebody else? But when it came to syndicating and raising capital, I felt that track record that we had in terms of building our portfolio, managing, so we started right around 9/11, when 9/11 happened, but we continued to grow, and we went through 2008, and those were, both totally different scenarios than what's happening right now. But the fear is the same. Fear is fear. Economic upheaval is the same. It goes far and wide, and it affects everybody. And I think being able to navigate through that gives our investors, a sense of, probably a sense of calm and reassurance. My partner in the syndications has been in business. He's a little bit older than I am, but in a totally different business, has that steady hand as well, that he's also been able to be successful and be in a family business that had lasted, decades and decades. So I think that there's the risk in that, because that's your name and that's your reputation on the line, but this is where you earn it. This is where, when you're able to keep a steady hand and guide your investors, guide your properties and deals in a positive fashion through turmoil. I think that's really where, like, what'll be a huge feather in our cap, when we get through all of this.
What do you think is important right now, getting through these tough times? What do you think is critical for you on syndicators in general? What is your advice to us to get through this time and try to keep everybody as calm as possible?
Yeah. Don't freak out. Stay calm. I mean, it's and that's hard to do. I mean, I would be lying to say, we all have those moments of fear where you're like, oh my God, everything's going sideways, but has it really? You have to take a deep breath and look at things from a practical standpoint and take it as it comes. I mean, if all of a sudden a bunch of people aren't paying and the revenues hit, well, research the options. Talk to your banks to know that, hey, if I have to, break this window in case of emergency, then that's what I have to do. And so talk to them ahead of time, that if you have to, again, go into forbearance, work out a deferred payment plan. If you're working with regional banks, they're oftentimes very, very comfortable in terms of making sure their clients don't go belly up. Look at taking out any lines of credit. The SBA has some amazing programs out there right now to help small business owners, and some of this is unsecured. I think anybody can get a $25,000 line, loan unsecured without posting any collateral. So maybe somebody's just starting out, but that may be not a lot if you have 10,000 units. But even if you have 10,000 units, maybe start planning for that if you really are concerned that your operations are going to take a hit. But again, talk to your investors. If these deals are performing the way that you as a syndicator have sold to your investors, then you should be sitting on capital ready to deploy for your Q1 distributions. And if that's the case, you may just have to say, hey, look, I'll give you an example. I have a deal we did last summer. It was a 205 unit. And to meet our projections, we distribute about $100,000 per quarter. And so we're prepared to make that $100,000 distribution on that deal April 15th. And I just use that because it's, example, because it's, an even number. Well, if we send that letter to our investors and we talk to our investors and say, hey, we're prepared to make this distribution, but God forbid, half the tenants don't pay their rent. Are we just going to lay down and not pay our bills? So maybe it's best to hold that for a month or two, because again, that $100,000 would certainly cover a couple months of, that would cover, probably in our case, 2 months of mortgage and taxes. So I think, if things have performed, to this point well for you, then you should be in okay shape to ride a bumpy road the next few months. And it certainly would not be a fun day to withhold distributions, but I can't imagine, any sophisticated or passive investor, they really have to, these are unprecedented times. you're going to be able to make this up to them in a larger way. It's not as though they're losing their investment the way they have in the stock market.
No, that's right. And by the way, just because you retain distributions doesn't mean they're actually gone. They're just sitting in your bank account in case you need them. And I think it's going to gain the respect of our investors to make sure that we never run out of cash. That's my main lesson from the last recession is never run out of cash. Right. Because if you do, your options are severely limited. And so having cash right now is going to keep everybody safe. So one of the things I hear you saying is make sure you don't run out of cash. Yeah. Communicate frequently with your investors. Work with your tenants, and and don't panic. And I certainly panicked in the last recession because I was in a restaurant losing $10,000-$20,000 a month, and that was pretty brutal for me. And it really taught me the lesson to not panic. So anytime you go through something like this, you're much more resilient. And we see a lot of panic, a lot of fear, which does two things: either it paralyzes you, which is bad, or it makes you do stupid things too quickly, which is also bad. And having a certain degree of calm around you allows you to make better decisions as well. So I think that's going to be key, in having experienced, operate like you and your partner is key in that, and your investors can feel good about the fact that you can guide them through that storm. Now, what's your kind of your parting advice, Jason? So we talked about operators, what should we do? Past investors, what should we do? Someone trying to get into this business right now, looking back on your own career. What are some of the things that are guidance that you have for people? What's important? What should they do, and what should they pay attention to?
I think one of the biggest things is to find a mentor, find a coach, whether that's paid or unpaid. But, it took me a long time to understand that importance of having people that are kind of further ahead on their learning curve that can help bring you along, and just constantly seek to learn and seek advice and seek wisdom. I think that, you can never be too humble in this business. And that'll come back in spades. So keep learning and stay humble, because, some of the guys that are out there pounding their chest about how awesome they are and their businesses a month ago, they may not endear the same type of love when they hit a bump in the road. So I just think that stay humble, stay grateful, but the biggest thing to help launch that career is finding a coach. So I mean, listening to podcasts like yourself, and I know you offer events and coaching and things like that. I just think that, and not to sell yours, I mean anybody, if you have a coach or you have a mentor, sometimes that's the best investment you can make. It's certainly better than having it in the stock market, because then at least you know how to take control of your destiny through good times and challenging times.
That's interesting you say that, and that's the one major mistake I made when I first became an entrepreneur. At the time, I had a whole bunch of money from a software IPO, and I felt essentially invincible, and I felt I could figure it out, and if I didn't, I had plenty of money at the time, so I sunk it all in these restaurants. And what I didn't do is I didn't get a mentor or a coach for that. I was getting into a whole new business with a lot of money. I had no idea what I was doing, and I thought that was a good idea. And that was really and like you said, that investment, people always ask, what's the return on investment? When you invest in yourself, by far is always by far the biggest return on investment that you get. So I agree with you. The challenge is not everybody can afford a mentor, and that's okay. And you got to do what you got to do. But there are a good number of people out who can afford it, and they're like, well, should I invest this in the stock market? Should I use it to buy a property with it, or should I get a mentor? And I think you agree the answer is get a mentor. Yeah. Get a mentor. Why do you say that, though? I mean, I can come up with other, but I didn't actually prompt you to come up with a mentor. I think it's interesting that you went. Why did you go there?
Well, when I reflect back, and I've got nearly 2 decades of experience in this business, and it's a roller coaster at times, but I've would credit a lot of my success to having good mentors, and a lot of them were not paid. I mean, I may have ended up buying their property from them and things like that. So I guess you could say I paid the price, but just find somebody that's been where you want to go. And I think we live in a really giving industry, and the guys, the old dogs that have been through this 20, 30, 40 years, they'll tell you about the mistakes they made, and they'll give you those warning signs and those guideposts and things that you can look out for. And I think a lot of people like to see others succeed, and they're willing to give. And so, yeah, if you can't afford it, listen to every podcast you can, read every book you can, and just seek somebody out that, but you can afford a cup of coffee. You can certainly buy somebody a cup of coffee or a lunch when we're allowed to meet face to face again, but that's the different time. But I think when you actually make the financial investment and finding a mentor, that then you're committed and you've bought into kind of the magic that's going to happen. You're already 80% of the way there when you've chosen to take action. And I think that that way that, a paid mentor or coaching program tends to keep people accountable because they've made that investment and they said, oh my gosh, I better now I really have to take action because I've invested the capital. But I think there's nothing better you can do than work on yourself. And I mean, we're all a little bit worried right now, but again, it's a perfect time to, again, you have nothing but time on our hands. So listen to the podcast, look at, watch YouTube videos, take a course, read a book. It's only going to do anything but prepare you to make that next investment and take those next steps in your investing career.
I agree with you. Right now, a lot of us are home, right? We have a lot of extra time on our hands. And now is really the great time to, what I call shift, to make the shift right now. A lot of people are like, I'm going to get started with this because I'm going to quit my job. Now is the time where we have the time to educate ourselves, read a book, buy a course, sign up with a mentor. Now is the time because now we have the time. And I think we're also going to get buying opportunities. So I totally agree with you that now is a great time to kind of get that started and do the things that we said we'd always want to do. Jason, this has been great. It's been a lot of great information and experience that you've shared over the last couple of decades. So thank you for that. How can people connect with you?
Thanks, Michael. And I really enjoyed it. I hope, I hope it helps some of your listeners. And anybody can connect with me. I'm always happy to hop on a Zoom call or a call just to talk shop and strategize. So they can book something through Calendly /Jason Perro. Connect with me on LinkedIn, Facebook. And if you want to put my email in the show notes, I'm happy to have anybody reach out and connect with you that way.
That sounds great, Jason. Thanks for being on the show today.
Thanks a bunch, Michael.
So the key lesson, if you own property right now, is to communicate often, both with your tenants and with your investors, because everyone's freaking out a little bit right now, okay? So make sure you communicate and work with your tenants, especially the good ones. If they have a good payment history and they got displaced by coronavirus, we just work with those people because they're good tenants. They're good people that just on short-term hard time. And then communicate with your investors because they're freaking out a little bit right now. The consensus among my peers is that medium term, we're going to be fine and as well because once we get through this thing, it's going to bounce back really, really quickly, in our opinion, and also it's going to present it with buying opportunities. So this is a great time to get into this business, both as a syndicator and also as a passive investor. Really, I'm just so excited about this multifamily investing class. It performed really well in the 2008 recession, which was really, really bad and sustained. I don't think this is one of those things that's kind of like a V-shaped thing in my mind. It really hit hot and heavy pretty badly, worse, in my opinion, than 2008, but for much different reasons. And once it bounces back, it's going to bounce back with vigor. In the meantime, it gives us a window and prevents us with buying opportunities. So if you're a syndicator deal finder, we're already seeing some of those sellers back off of some of their requirements, their prices. Motivation is much higher. I think we're going to get some good buying opportunities. And if you're a passive investor, now is no better time to get into multifamily deals and start pulling out some of your money onto Wall Street. So if you're interested in that, and you're interested more about investing in multifamily versus the stock market, check out my free report called What's the Best Investment, Stocks or Real Estate? And you can get that at themichaelblank.com/report. I think you're really going to enjoy that. If you're ready to take a next step, then join our investment club at Nighthawk Equity. That's nighthawkequity.com/join. And then have a conversation with us, and then we can share with you some of our upcoming opportunities that we have. Now, Jason also talked about mentoring, and I would be remiss to mention the mentoring program. If you are more of an active investor and you have the ability to invest in yourself, right now is a great time to do it. It's going to be a great time to find deals right now, as well as to raise capital. And if you believe in mentoring, you have the ability to invest in yourself, check ours out. It's at themichaelblank.com/mentor. And like so many things, it starts with a conversation with us to see if that's a fit for you. I do believe we have the most comprehensive program on the planet for helping you become financially free. We cover every single aspect from getting started to scaling your business. In fact, we call it the blueprint of financial freedom. We've done it so many times. Really excited about that. So check us out at themichaelblank.com/mentor. I think with all these things going on, make sure you guys stay calm, stay safe, take the time to spend with your families, and work on your spirituality perhaps, and stay calm and invest in yourself. Now is a great time to do that, kind of a little bit lull in the action, but it's going to be great and opportunity-wise. So thank you so much for listening, for watching if you're on YouTube. Catch you guys next episode. Hey, and before you leave, make sure you subscribe to my channel below. We put out videos every single week and you don't want to miss it. Also, if you haven't done so already, grab my free ebook here, okay? It's a secret to raising money to buy your first apartment building deal. It's a good one, so grab that. And hey, check out another video.